Welcome back, everybody. Thanks for tuning in. This is another episode of Millionaire Reacts, where we watch stupid, shitty TikTok videos and react to them. As you can see, we've got the new setup, so if you are intrigued on how this happened and what went all into this, make sure that you check the Studio 2022 tour that has just been posted. Also, this week's schedule, we've got Monday Millionaire Reacts. We've got Tuesday, the Studio 2022 tour goes up and live. On Wednesday, I've got youth group, so we have no videos coming up on Wednesday. On Thursday, we have a Sims video on how to make money using Sims as a visual representation. And then also on Friday, we have a wild card. I have to cough, excuse me. I've got COVID as well, so hopefully that'll be finished up here pretty soon. I think I'm on day like 13 or so. But let's get into this. I hope you guys enjoy. Hope you get your time's worth, because it's more than your money's worth. If you're not subscribed and you like this kind of content, make sure that you drop a subscription. We are going live on Twitch, as well as YouTube and Facebook, once or twice a week, just gaming and doing casual stuff like that. But let's get right on into this. Make money with this investment TikTok comp is what it's titled. Let's see if there's any merit to what they're saying. So let's make it a little bigger.
Now that'd be all.
11.98.
11.98. Now I could buy more contracts. I'm good.
Babe, can we get this comforter set?
164 comforter set. I can get a whole new Apple shirt for that. Nah, I'm good.
Alright, let's pause that right there. I like this guy's mindset, is the first thing that I want to point out. He's got that mindset of, wait, I don't need to buy liabilities. I can actually buy more assets. So that's the first thing that I want to say good job and kudos to. But I don't like how he just said it so nonchalant of, oh, I can buy more Apple stock. He didn't tell me at what point, excuse me, at what point Apple stock of the cost of 164 is too high, too low. Is it in, where it should be? Is he doing a dollar cost averaging where he's buying over a long period of time? Like, he hasn't told me anything about the Apple stock except he could buy more. But if Tesla is at $1,000 a share and it's worth $400, do you still want to buy more at a loss of $6? Let's keep going.
700 for a TV. Now I can buy more Tesla contracts. I'm good.
No. Don't buy Tesla. Every great investor stays away from the hype stocks. They're hype stocks for a reason. No. Do your own evaluation. Don't just take my advice for it. You do evaluation of see how much Tesla's worth and you come back to me.
Here's a quick stock tip. You want to know if your stock's going to perform well the next 12 months or if it's going to run into trouble? Let me show you.
Look at the past.
First, go to google.com. Then type in your stock symbol, earning report, and then type in NASDAQ. Click the first or second link, in this case, the first one. You're going to scroll down and run into this chart. What this chart shows you is the estimate sentiment that analysts give for the next following 4 quarters. You're going to want to focus on next year, same quarter. And you can see the stock's expected to keep rising. Next quarter.
Why? If you look at the earnings report and it's going up, why should you pay more for the stock? Well, of course you pay more for the stock because they're getting more sales. And the more amount of money they make, the more amount of company that you would make, so therefore that's how much it's worth. Generally, right? Like if, for example, if Alibaba, as of, excuse me, the time of this video is $150 or $160, and their revenue keeps going up, well then therefore their stock price should also go up because they're making money. If it is going down, they're losing money. Just generally though. Obviously, Tesla stock is valued at $830 right now, but in the 52-week low is at $200. Has the company made or lost more money in 52 weeks to justify that? Well, the answer is no. They've made about the same. So, that's why. And analysts aren't always right. Just because they make more money, their stock could also go down. AliExpress and Alibaba, their stock has actually gone down as they made more money. Why? Because of fear and scarcity, and the China crackbacks and stuff like that.
Quarter rising, next quarter still rising. In this case, Target is expected to do good. Let's try another stock, Kraft Heinz. Starting off a little rough. Next quarter, about the same, not impressive. Final quarter, still decreasing. Looks like Kraft Heinz is still going to be having trouble.
How to retire a millionaire.
This is
If
easy.
you're between the age of 18 and 25 and you live in the USA.
Yep.
Step 1, open a Roth IRA. You can do this by going to...
I'm for setting money aside. I guess some people... our Roth IRA is not that bad.
Betterment.com,
We'll allow it.
clicking Get Started, invest for retirement, not currently retired. How old are you? Let's say 18. Annual pre-tax income, $6 grand, because you're 18. Type of retirement account, Roth IRA. Click Continue. Drop a spicy email. Get you a strong password. Just finish filling all this out, open an account. When you're done, you'll be good to go. Step 2 is earn or obtain $250 a month. Then contribute that to your Roth IRA. By contributing like $250 a month from the age of 18 all the way down to 65. And if you do $500 a month from 18 all the way down to 65,
Yep.
maybe you're balling on a budget, $100 a month, not bad. So you don't start till 25, $500 a month, still looking good. And that money is all tax-free. Seriously, it's tax-free.
I like that. That shows the power of compounding. Most people can do better than our Roth IRA. But if you just want something where you just live your own life and you have absolutely nothing to do but throw money in there and get money out with the power of compounding, I'd recommend it.
Here's a life hack that's going to save you tons of money that they didn't teach you in school.
They didn't
Okay,
teach
so
anything
most
in
people
school
buy
like
a
this.
single-family home and have to pay $2,500 a month for their mortgage. They get no tax deductions and no write-offs.
Is it going to be like
Instead,
a duplex?
use the house hacking strategy and buy a multi-unit property.
Yeah.
Live in one unit for a year and rent out the others. If you charge $2,500 a month for each of the units, that's $7,500 a month, which should cover the cost of your total mortgage. You might be too young to buy a house now, but you'll buy a house one day. Be sure and save this video.
Let's say you get a mortgage on...
I'm okay with that. I actually like that idea. It's called house hacking, where you live in a multi-unit and you obviously rent out the others. You probably can't charge $2,500 or $2,500 for you could do for a whole house, but probably not for 1/3 of a house. So the cost would have to be a little less, but you could still make it where you make money. 100%. I am 100% for that. So that's got the thumbs up, seal of approval.
a house for $300,000. You took that mortgage out today, and it was a 30-year mortgage at 3.5% interest. For a mortgage like that, your monthly payment would be about $1,347.13. And in total, you would be spending close to $500,000 to buy that house over the next 30 years, because almost $200,000 would be spent in interest payments. But let's say you could put a little bit extra aside and you paid an extra $100 every month. That $100 would save you 20 grand, and you would pay off your mortgage 3 years faster than you would have otherwise. And that's just $100. Let's say you get 2 roommates and charge them both half the price of the mortgage and continue making your normal payments as well. This would mean you're making double mortgage payments each month. You would save $121,000 and pay off the mortgage 18 years early. Don't tell me that's not sexy.
Yo, I
That's sexy. I like that. Good job.
just got a new job and they offer a
Thumbs up.
401k and a Roth 401k. Which is better? We're both retirement accounts, but obviously I'm better. Because you invest in me with pre-tax dollars, you have to pay less taxes at the end of the year. And my employer offers a match. Dude, my employer offers a match too, but because you invest in me with post-tax dollars, you don't have to pay taxes at retirement, meaning all of the money that grew in your account doesn't get taxed. Wait, so 401k, don't pay taxes now, pay taxes later, and Roth 401k, pay taxes now and don't pay them later? Exactly, so all that growth is tax-free. Tax-free.
The average cost of 4 years at a private college is $50,900, and a lot of people get a student loan for the whole thing. One of the main reasons people say you should go to college is because you can make more money afterwards. But the truth is, most people struggle with student loan repayment for the rest of their
Yeah, they do.
lives. The average interest rate of a student loan is 5.8%. Just the interest on a loan that big would be $246 a month. What if, instead of going to college, you just invested the same amount you would pay in interest on that loan into the stock market at an average return of 8%?
8% is
Well,
nothing.
You'd retire with $1.5 million.
That's proof that don't always go to school. All right, let's check out the next one. I kind of like those. Those are pretty good. Most of them. I haven't heard any dumb shit, so let's keep going.
There is the NASDAQ, the Dow, and the S&P 500. And then you have your own house. However, your house is empty and you need furniture to fill the house up. So what do? You go to the other houses around the neighborhood and you pick out furniture that you can fill into your house. Now the furniture in each house are certain companies that you can purchase to bring into your own house. For example, a couch that you bring in from the houses can be called Apple. A dining room table can be called Microsoft, and a bed can be called Facebook. The furniture you bring in from those houses into your house is now called a brokerage, which is sponsored by TD Ameritrade, E-Trade, Charles Schwab, and so many more. Now, the furniture you have in your brokerage can increase or decrease in value at any time. You can also sell it back to the houses that you purchased from whenever you want. Follow me for part 2.
That's the stupidest analogy I've heard in a long time. Houses. Why couldn't they say you buy a portion of the company and you can sell it at any time? You say, is it worth... Say you buy Apple at $1. Apple goes to $5 on Monday. Do you want to sell it? Yes or no? No. It goes to $10 on Tuesday. Yes or no? No. It plummets. It goes down all the way to 3 cents on Wednesday. Do you want to sell? Yes or no? Well, I don't want to lose money, so no. Friday, you go up to $100. Do you want to sell? Yes, please. And you sell. Right? Like, you don't need to bring all these complicated things in. You are buying a portion of a company. You're not buying a ticker price. Okay? And you sell when you want to sell and buy when you want to buy, as long as it's in the hours, within the market hours.
I think I'm falling for you.
No. Stocks will be held forever. I'm okay with Amazon. I'm okay with Starbucks, both of which are overpriced right now for my valuations. Do your own. Tesla. It isn't. You guys are gonna... No. I'm not even getting into this in this video. All I'm saying is you look into the price of Tesla right now, see how many cars they make, and you check Toyota, Ford, everything. They have a higher market cap than all of them. Is their growth that much more? And before you call me a Tesla hater, I own a Tesla. I love the car. And I own their stock until I sold if I didn't sell when I made more money now. 100% yes. But when I've lost more money, also later down the line. Like, look at this real quick. 1 year, right here. 47, 200, 356, 510, 665, 878. Like, yeah, it's going up. But is Tesla worth this? Is the real question. You need to answer that yourself. Coke, no. Nope. We were off to such a good start. Coca-Cola Consolidated. Basically, if you guys don't know, Coca-Cola Consolidated is just a company that it's not actually the true Coke. The true Coke stock is KO for Coca-Cola. The Coke Consolidated is basically just a whole bunch of Cokes that have become consolidated into one Coke. And they're fluctuating like crazy, and I would not buy for $2.73. I'd encourage you not to as well. But again, do your own do your own research.
I've made over $50,000 in about a month, and this is how I did it.
Is that a green screen in the background? Alright, let's just keep going.
Did 3 trades with stocks and options in the stock market with proper risk management. I only traded when there was a large event that was happening for stocks such as Apple, Amazon, and other large companies. 20% of my account, I only play deep in the money options with a far expiration date or a vertical debit spread, which is an option strategy which is safe and reliable. With the remaining 80% of my account, I invested into large cap companies which are safe and reliable and that will grow over time. This month, we want to help you grow your small account into something big. And if you're confused about any of these terms, don't worry, we're here to teach you. So make sure you click the link in my bio and join our free group.
What would I do?
So that video was a thumbs down for me. It was just join my group. And you've made $50,000 in 1 month. I mean, congratulations. Most of that's probably long term, not short term. I do long term, I don't do short term. That's not because I don't like it or I don't understand it or anything like that. I prefer to do long term because that's where my skill set is best set. Okay, let's keep going.
Do if I was a complete beginner to the stock market? Well, I would do these 3 things. First, I'd read this book all about investing. Second,
Yes, that was a good book.
Second, I'd build an emergency fund, which is
Again, I'm good. Keep going, bro.
3 to 5 months of my living expenses. Third, I wouldn't invest in individual stocks like Tesla. Instead, I'd put all my money into index funds like the S&P 500 and hold it long term, because no research is required and it doesn't drain my time.
I'd agree with that. If you are an absolute beginner and you have no interest in learning, don't. Throw in an index fund, get like 15% a year on average, and call it good. YouTuber CEO, yep, welcome to the club.
Stocks that will go crazy this week.
Let's look this up too. So, Genius Brands, it's shot up. It's at $1.50. Should we, so GNUS. Does it say when this is? No. Well, let's just look when it hit $1.50. 5 day. 6 month. Year to date. Alright, let's just go here. Say best case scenario. Right here. He was at $1.46 and he says it's going to go up. You would have had to get in at 146, get out exactly at 306. Well, otherwise it'd be $1.97. You'd still make money, right? But if you go, excuse me guys, just COVID beat. So most likely it was somewhere here in the middle. 140, right here. He was right. It was growing and then it shot back down. And then it goes up and down, up and down, up and down. So I'm gonna say that's a no. So we'll do a thumbs up. ATOS. Let's check you out. 278 at the time of this, 193, and it's going down. It's 3% down on the day. Oh, and this is a NASDAQ stock. It's not a penny stock. So that's a no. And then Infinity Pharmaceuticals, INFI. NASDAQ, 278. That's, what, 411 at 278? It plummeted. Whatever. Let's keep going. Also, if you hear my cat in the background, he just likes to talk, so enjoy.
Best gift that you can give your kid. And if you're a kid, this might be the best gift that you can ask from your parents. If your child is under 18 years old, the best gift that you can give them is a custodial account. So why is this the best gift? It's because your kid has this one thing that you don't really have enough of, and it's called time.
Yep.
If you just deposit $10 every single day into their account and invest in something very passive like an ETF, in 40 years, they'll have $1.6 million. Because your kids have more time on their hands, their money can exponentially grow faster. So the question...
There's two things if you can do for your kid. Two. Number one, add them to your credit cards only if you have a good credit score and you pay your credit cards. And then by the time they're out of high school and going into college, they have a near perfect credit score. Assuming you pay off all your stuff, right? Obviously, if you don't, you're going to hurt them and, don't do that. But that's number one. Number two is set aside money for them for their, whether retirement or later down their life. It's something that either gives passive money or what you're doing, like choosing stocks, and just let it sit. Because the power of compounding is real.
The question is, do you really want to get your kid that PS5 or a custodial account?
You could do both. They're not that expensive.
Hey, can I buy one share of Tesla? Do you
No.
want to place that as a market or a limit order? I'm not sure. What's the difference? Well, a market order will
One, you pay... I'll let them explain.
place that order as quickly as possible at whatever price it is right now. I like it. I think it's trading just a bit high right now. I'd like to buy it if it dips below $1,500 a share. Then you'll want to buy limit order. At limit $1,500, the order only executes if the share price of Tesla is $1,500 or less. So market orders...
Yes, but generally, if you have that limit order and it goes to that price, you have to buy it. So if it goes lower, you buy it for that set price. So they say if it goes to $1,500, for example, we will hold this order for you when it goes to if it goes to $1,500, if it goes there, will you buy it? Yes. Okay, boom, contract. So you will buy it. But if it goes lower, you still buy for the 1,500. And you're, most of the time, you're obligated to buy at that price.
Prioritize speed versus limit orders. Let me set the price I pay. Got it.
So make sure you set your right
Options
prices.
are actually really easy to understand. It's kind of like shopping. If you're going to buy an option for a stock you think is going to go up, it's a call. So think of it like this. I call up Ulta Beauty, and Tina picks up. And I'm like, hey, Tina, I want this makeup palette. And Tina's like, okay, but you know what's up. And you're like, Tina, rumor has it that this palette's about to go up in price. So if I come in tomorrow, can I still buy it at said price? Tina's like, yeah, that's fine. But we do charge a small fee for any items that we keep on hold. And you're like, that's fine, Tina. Charge me. Sure enough, the price does go up. So you run in the store, pick up your items for the said price that you told Tina yesterday, and then you sell it to someone on the way out because you didn't even really want that makeup palette. And you're just pretty freaking stoked because you called.
Okay.
When stocks are going down, there's one important tool that investors use to determine if they should buy the dip. It's called the simple moving average, and investors use it as a safety net for the stock market. As you can see above, the blue, green, and red line represent the 50-day, 100-day, and 200-day moving average. Last week when we had the sell-off on Thursday and Friday, the market came down and hit the 50-day moving average and bounced off, and it acted as a safety net. There are also situations where it breaks through the 50-day but bounces off the 100-day. You should never make your investment decisions solely based on moving averages.
Agreed.
Always wait for multiple confirmations. To learn about these confirmations, make sure you click the link in my bio
No.
and join my free group.
Don't buy Neo is my recommendation. But again, I'm not giving you recommendations, I'm just giving my 2 cents. Neo's overpriced. 100%. Let's cover it. Alright, so $47 at the time of his video, okay? It's definitely higher now. Oh, sorry. Nope, it's $39 a share. If we go to max, max's spend is $57 a share, okay? How many cars does Neo have on the road? Right? Because we want to know how much money this company makes. Because the more the company makes, the more they're generally worth. Because it's tied to their revenue, right? Apple is a huge company and Amazon are huge companies because they make a lot of money. Well, how much money does Neo make? And how many cars do they have on the road? They have 0 cars on the road. They've got ones that you can test drive, and so they're growing, right? So there should be a growth, metric in there and a growth formula. But how much did they make? Let's go to Yahoo. Let's look at this. Let's look at this together. Okay. Let me shrink my face real quick. Boom, and let me just shrink my face. Okay, watch. So, before buying a stock, what should we do? We should look at their fundamentals, right? Well, first of all, this is their earnings projections. Finances. This is what I care about. I don't care about anything else. Yahoo says they're overvalued. Short-term good. Yeah, I don't care about any of this. What do I care about? I care about the finances of the company. Why? Because their stock, you're buying a portion of a company, and you want them to make more money. Like if you buy 2 companies, both sell candy bars. One makes $1 a candy bar, the other makes 50 cents a candy bar. The one that makes $1 is worth more because it makes more money. Right? All right, let's look at this. Let's look at this. Total revenue. This TTM is trailing, and we don't want that. I think it's trailing 10 months or whatever the heck it is. But we don't want trailing. We want to know what they actually made. All right, total revenue, $16. Cost of that revenue, $16,000, $14,000. And these are I'm pretty sure these are millions now that I'm looking at it. Oh, they're billions. Oof. Look at that. But in this number, $16,000. Cost, $14,000. Gross profit, 1.8. So they've made 1.8. Wait, operating expenses. -4, -5, negative. No. So if you look at the graph right here. All right, 2017, nothing. They made 5, they're -23. Made 7, -11. Made 16, okay, -5. So we're on the up and up right now, right? But they still have this big hit they have to take back. So they're still down in the hole. And obviously with the chip shortage and everything, all I'm saying is you need to do your own research before you buy a company. Don't buy it off the hype. That's all I have to say about that. All right. Let's get back. Let's make it a little bigger. Let's get back to this.
Here's the #1 stock that I'll be watching this week. It's Virgin Galactic, ticker symbol SPCE. Virgin Galactic is a spaceflight company founded by Richard Branson, the owner of Virgin Airlines, which will launch tourists such as me and you into space to view Earth. This coming weekend, their flight window opens, which allows them to do one more test flight. Their chart above also looks ready for a massive move to be made. In case you're thinking of holding it over the weekend, please be aware of buying the rumor and selling the news, and also the test flight can fail. We'll be talking about this stock all week long.
Yeah, I'm not joining the group. All right, let's check that out real quick. We're at 26 minutes, so we'll try and hurry this up. So,
here's the number E. Virgin Galactic is a...
Oh, I missed it. So let's go back.
This week. It's Virgin Galactic.
SPCE, $54. Bruh, you would have lost. You would have lost double your money. Double, bruh. No. This is what this guy's doing. He's looking at stuff in the news. He's like, what's gonna go up? What's gonna go down short term? And don't care about long term. And he's like, hold, don't buy. But if you make money off of where you buy, not where you sell. Let me say that one more time. You make money off the purchase and not the sale. For example, if I bought this for $20, that means my baseline is 20. Now I can go either up or down. But I bought it for 20. So whether it's at 21 or 50, I bought off the purchase, not the sale. So $54. It's look at this. Let's look at the year to date, bruh. It's at $19 right now. If you would have done this and you just would have sold at this time, obviously, I have the privilege of knowing, back then, and I don't know the future, but I'm in the future, right? No, you don't buy off of hype. You look at the fundamentals of the company. If he didn't look at the fundamentals at all, he didn't look at all. Look. Made 1.7 million, lost 138 million. Made 2.8, lost 138. Look at this. 2020. Made $230,000, lost $644 million. If somebody came up to you and said, hey, I want you to buy this company, we're going into space, it's going to the moon, literally, but we have a little problem. Last year, 2019, we made $3 million, or 3.7, so we made $4 million. How much did it cost you to make that? $215 million. You would say leave. You would say you're dumb. No, go. And then this one, for example. Yo, I want you to invest in this company. We're at $20 a share now. Well, how much money did you make this year? Well, I made $230,000. Okay, well, I've made more than that, but okay. Well, how much did it cost you in earnings? Oh, yeah, negative $644 million. Bruh.
Galactic, ticker symbol SPCE. Flight window opens, which allows them to do one. Thinking of holding it over. We'll be talking
GameStop. Whoa, why? Stock doubled in a week. It's going up. Oh, before you invest, do you know why GameStop went up?
Hype.
A lot of people on Reddit bought their shares, forcing the price to go up, and then forced a short squeeze on all the short sellers.
Yep.
All I heard was squeeze. Just letting you know, GameStop is going out of business, so before you invest in anything, it's always best to do your due diligence and not just listen to anyone on the internet.
Good.
But it's going up.
Excuse me, why are you giving
That
me
was good.
$2?
I like that.
Well, dude, since you own one share of Apple, we actually pay you a dividend every year and every quarter just for owning our stock. It's a percentage of our profits that we pass back to you.
Yep.
Mr. Tim
Dividend,
Apple,
yep.
that seems a little bit too good to be true. What's the catch here? No catch, my young son. As long as we continue to pay a dividend, you'll get $3 for each additional share that you own of us. What the hell? That's awesome.
There is a catch, and we'll get to that.
Awesome. I'll buy one more share. Splendid. Welcome to the infinite loop. Here's another $3.
Alright, here is the catch. You ready?
Hey, so
The catch is, so, it comes out of their free cash flow, their dividend, which means that, say, Apple, for simple math's sake, okay, they make $1,000, and they pay you $1 of it per share, right? That comes out of their money that they have in their free cash. Generally, dividends are taxed a lot higher than just your average, long-term gain tax, okay? That's the first thing. The second thing is, generally, companies that don't pay dividends, I'm okay with because they invest back in themselves and in the company and in other things, right? So they have smarter ways to use their money. I'm okay with a company not paying me a dividend if they're going to invest it in a company where my stock is worth more. Apple is probably an exception to a certain degree because they make so much money that they don't know what to do with it. So that's why I'm okay with Apple's dividend. But for example, Kraft Heinz could do much better with not paying a dividend and paying in and bettering the company. So that's the catch. 22.
So if this video has inspired you in any way, shape, or form to perhaps $10 worth of web more.
Top 5 stock picks under $10. So let's get into it. At number 5, we got the ticker NOK. This company just reached a deal with NASA to put cellular towers on the moon, so good play. Sitting at number 4, we got Zynga, under the ticker ZNZ.
Zynga's a no for me.
This company owns a lot of different phone games, including one of their most popular, Zynga Poker. At number 3, we got MFA Financial, under the ticker MFA.
Their fundamentals are horrible.
This
Check
company is
them out.
backed by Wall Street, so I have no concerns about this one. Sitting at number 2, we have New Residential Investment, under the ticker NRZ. This is very highly undervalued compared to a lot of the other stocks in their segment. Sitting at number 1, we got Palantir Technologies. I'm really sorry if I pronounced that wrong. I am dyslexic. This stock is under PLTR.
Invest for 40 years and then become a millionaire, but what if I want my money now? Of course, investing in ETFs gives you around 7 to 10% every single year, but if you want to increase your profits, you can open up a cash account and sell covered calls. Oh, so I could have both a Roth IRA and a cash account? Yeah, totally. I have my Roth IRA as my retirement account, and I have my cash account to bring in income every single month. Okay, so can you explain to me what you do for each account? So for my Roth IRA, I'll have long-term investments like MasterCard, Visa, PayPal, Square, Microsoft, Apple, and Amazon, and a couple of ETFs like QQQ.
So I'm okay with that. I like it that he has a good amount of stuff. I'm really curious on what price he bought it at. But other than that, I like it that he has that. That's good.
And SPY. For my cash accounts, I'll sell covered calls and cash secure puts to bring in a couple $1,000s every single month. So this way I can pay for my lifestyle. Dude, that's cool. Where can I learn more about this? You can go to calltoleap.com. That's where they show you how to sell.
You're an American citizen, you actually have the right to look up and see which stocks rich people, CEOs, CFOs, people that are high up in companies are buying, and you're allowed to copy it. So I'm going to show you the website I use because I made 17% on a stock in just one day today. So, okay, so all you have to do is go to this website right here, Open Insider, click on this button that says charts, and it's going to show you the blue right here is when rich people are buying a bunch of stocks, and the red is when they're selling it. So back when COVID hit, they started buying up a bunch of stocks, and then they all went up in value, and now they're selling them.
Okay, so that's good and bad. First of all, being rich and being poor doesn't necessarily mean that you know a lot about stock markets and stuff like that and when to buy and sell. Right, I came from a very poor home, and yes, I have more knowledge now, but that doesn't necessarily mean, listen to everything I have to say because I'm gonna lose sometimes. You're gonna lose sometimes, right? So make sure you're making educated decisions and don't just do off what rich people do because they're not always right, right? And yes, it's all public information. You can check. Like, you can see what Warren Buffett has investments, but you can't necessarily copy it. For example, Apple. Warren Buffett bought Apple for like $40, and he wished he bought it for lower, right? But if you copy him now, you're buying at $160. Was it worth that? Well, you didn't even ask if it's worth, what the fundamentals were, where the cash flow is it making money, losing money. You didn't ask any of that. You just, so I'm just going to copy him. You can't just do that.
So yeah, it seems like it would be...
And you can, you'll just lose money.
Yo, I just got a new job and they offer a 401k and a Roth 401k.
We already saw that.
Number 1, Bitcoin.
We're skipping Bitcoin.
3, I hold.
We're skipping Bitcoin. I don't invest anything in any kind of cryptocurrency, but that's a personal preference. And we're not going to get into that in this video.
Let's take a look. Ground rules. The 100x can't take the current market cap of 140. My opinion. Let's get it.
On a longer weekly.
Alright, let's keep going. Is there anything that's not crypto in here? I'm sure that cryptos are probably the best ones, though.
That would take the market cap to just about 90 billion. That would take the market 12 point.
Time high, Ethereum is now trying to retest the
Alright, let me give you my 2 cents.
And there's clearly in 2021.
Alright. Excuse me. I'll give you my 2 cents on crypto, and we'll end the video. So, first of all, let's look up this thing. It's called... It's called Tulips. I don't have any cryptos and never will. Let's watch this video for a second. Right here.
Lucas writes in, he said, did Justin Sun change your mind on cryptocurrencies? For anybody who doesn't know, Justin Sun bought the dinner or the lunch that you just had from the last Glide Foundation fundraiser. He is actively involved in Bitcoin. After that meeting, his PR people put out some notes saying that, you know, you kind of listened to cryptocurrency and maybe you're a little more in tune with the idea of Bitcoin now.
Well, I would say this, when Justin and 4 friends came, they behaved perfectly and we had a good 3.5-hour dinner and the whole thing was a very friendly exchange of ideas.
Warren Buffett's a nice man. He'll listen to you even if he doesn't like you.
Cryptocurrencies basically have no value and they don't...
Yep, cryptocurrencies basically have no value.
...produce anything, so you can look at your little ledger item for the next 20 years and it says you've got X of this cryptocurrency or that. It doesn't reproduce, it doesn't deliver,
Yep.
It can't mail you a check, it can't do anything.
Yep, you don't get dividends, you don't get money back, you just get...
And what you hope is that somebody else comes along and pays you more money for it later on. But
That's true, because the whole point is somebody, some sucker, in quotes, has to purchase it for more than what you paid, right? Like, Bitcoin's like $40,000 right now, and at the time of this is 9, right? 4 times as high. But what happens when it's not? And somebody has to buy it at $41,000 so you can sell it.
And that person's got the problem. But in terms of value, you know, 0.
So it sounds like he did not change your position.
No, but I didn't change his either. And I had a very...
And Warren Buffett, he's a nice man. He's like, I'm not trying to change your position. I'm not trying to, you know, alter what you think about. I'm not trying to do any of that. I'm just, you know, he sticks to what he knows and I stick to what I know. And people that want to make tons of money in the crypto world, if they're smart enough and they can, then good job, congratulations, and I applaud you that you found a way to make money. You know, I definitely encourage that. But if you don't know and you're buying into the hype, you are going to lose money.
Very pleasant dinner, and those people they behaved more than well. And they gave 4.6, or Justin gave 4.6 million to Glide, and that will buy a lot of meals and provide a lot of beds for people in San Francisco. So I thank him.
He gave you some Bitcoin. What's it feel like to be a Bitcoin owner?
I don't have any Bitcoin.
You don't?
No.
Okay.
No.
You don't own Bitcoin?
No, I do not own one. I don't own any cryptocurrency. I never will. And, you know, in the end, I may start a Warren currency. You know, maybe I can create one and I'll say there's only going to be 21 million of them and you can have a little ledger sheet from me and everything that says you have it. And you can have it after I die. And but you can't do anything with it except sell it to somebody else. And the interesting thing, of course, is that Bitcoin's been out there a long time, and people talked about how it would be used in various kinds of exchange, but none of our companies are doing business in Bitcoin or anything. Bitcoin has been used, I think, to move around a fair amount of money illegally. So
to be fair, yeah.
Countries where you have
so the logical move from the introduction of Bitcoin is to go short suitcases, because the money that was taken in suitcases from one country to another, suitcases will probably fall off in demand. I mean, so you can look at that as the...
So Warren says I'm not going to own it, but if you're going to do it, short it. Right? Like, it's going up right now. 100%. Let's look at this real quick, and then I'll end the video. look at that. $60,000 now. See? It's going up. So if you could catch... Let's do a 5-year. If you can catch the trend going up, perfect. Good job. You'll make money along the way. But I'm a long-term value investor, and I'm not looking between 2019 and 2020 to make $10,000. I'm looking to make much more over many, many more years. Like right now, look, it's shot up and then it's shot down, and then it's up at 60,000. So you have to think about who can afford a Bitcoin, just one. You know, how much is it? How are you going to, you have to think about those things, right? Who's the target market? Is it worth it? Is it going up or down? And I think Bitcoin's going to go up for quite a while, honestly. And there's definitely money to be made in it. But I'm not making any of my money in it. And that's my 2 cents. I think it's going to crash too. I don't think any cryptocurrency right now, personally, is going to replace the US dollar. I think there's going to be a cryptocurrency or a currency that maybe does, but I don't think that it's Bitcoin. And all of the stuff behind Binance, as well as Coinbase, and all like the rumors. It's just too much for me. I prefer to make money in where I know the fundamentals are and stuff like that. But anyways, I hope you guys enjoyed. Thank you so much for tuning into this video. Excuse me. And I really hope that you got some knowledge out of this. I know this wasn't a TikTok video for, kids spending money, but I really hope that you guys enjoy it. I will see you guys in the next one. Have a wonderful day. Bye.